My name is Hannah and I'm from HiCom Accounting. HiCom Accounting is an accounting firm and also a tax agent. So thank you so much for coming back to another Thursday tax tips today. The topic that I would like to discuss about this week is open banking. Open banking has been discussed for quite a while already. It's not a very new news, but it's a big news. So from the 1st of July 2019, 4 big banks in the market, including Westpac, NAB, ANZ, and Commonwealth, they make the information of transactions, debit, credit, and deposit accounts available for data sharing. And then from the 1st of February 2020, which is now, these 4 big banks, Commonwealth, ANZ, Westpac, and NAB, are in the process of making the information of mortgage data available. Mortgage data including your home loan, your investment loan. And then from the 1st of July 2020, which is the next financial year, by the end of this financial year, these 4 banks gonna make everything available, including your personal loan, your business loan, your foreign transaction accounts, your pension account, or your trust account. Everything is going to be available for sharing from the 1st of July 2020. So how are these going to affect you? Basically, in the next financial year, with your consent, with your permission, your mortgage brokers or your bank or your lenders, with your consent, they will be able to see everything of your banking transaction, of your banking activities, including how many loans you have, how many business loans, how many personal loans, what are the activities of your debit, credit, or anything that you're gonna have. So, which means that they will be able to see the payment frequency that you make for your loan, any overdrawn transactions, any missed payment, any bad credits activities that you have on your credit. So it will reduce a lot of time for your mortgage broker or your lender to calculate the loan for you to borrow if you intended to invest into more assets. But it also means that anything that you don't want people to see, or any payment that you make for any activities that you don't want people to see, you gotta be careful with that. Technology brings a lot of opportunities, bring a lot of change, but it also means that with this massive data sharing, there's nothing going to be in the dark anymore. No one can hide anything. That's the negative side of it. The good side about open banking, how does that affect investor or customer? So with open banking, all the information going to be available to everyone. It means that customer will enjoy a better deal. So before, when you want to borrow for investing into your house or your investment properties, or for any kind of loan that you want to get, you pretty much everyone rely on mortgage broker or just one bank. They go to the one bank and then rely on that bank to do the calculation. But if the information available for anyone to see like that, everyone in the market, any banks in the market will try to jump in and offer you a better deal. Competition is going to be fierce, and customer will be the one who have the best deal out of everything. So for your application in the future, if you, with your consent, your mortgage broker and your lender will see everything. But I also add, if you don't consent, or if you don't agree for them for open banking or for data sharing, your lender would probably not going to consider your application, because it's going to be the way to go now. They would want to see everything. They would want to see how many payment that you have missed, and are you good with other credits that you have. So in the future, they're not going to rely on your honesty to declare with them how many loans that you have anymore. They will be able to see everything. So at this stage, there's no formal information that's saying what is the rate of your missed payment that's gonna affect your loan application. But just be mindful that you need to organize your banking, you need to organize your repayment with all the loans that you're having, and one thing that I normally do for myself is that I set up all of my loans to be paying weekly, on weekly basis, as I already shared from last time about the frequencies of payment to save your interest on your investment, is that you should make your payment weekly, because the interest rate is calculated on daily basis. But this also means that the more frequent the payments that you have to make, the more likelihood you're gonna miss 1 or 2 payments during the whole year of repaying your loan. So how to avoid having missed payment, how to avoid bad credit situation, you have to be good with cash flow management, or set up on your phone, on your calendar phone, 1 day per week before the, like if you have 5 loans or 10 loans, you set up the day that you repay. The payment is every Monday or every Sunday. Then you set up on your calendar either every Saturday or every Friday to revisit your loan, to put the money into every single account like that. Or make sure that don't borrow more than you could pay. Otherwise, if you leverage more than your paying capacity, it's just gonna affect your credit status in the long run. For business owner who are mortgage broker, it is discussed that, like with open banking like this, the one with the very good technology tools will be the one that advance in the market. Because of all the data available like that, some mortgage broker who don't have the technology to support in place, it would be really complicated for the hand calculation, or for the, because before the calculation would just be like 1 or 2 loans or the simple situation. But right now, with this massive data sharing, when mortgage broker do a loan for a client, that could be personal loan, business loan, investment property, house, and all the other credit situation that will be taken into the place. The question about mortgage broker will be out of job or not, I don't think so for any time, any short term given, because of course the banks will be the one that have the best tools to combine all of the loan or all of the information together, and then give the client the fastest and also the quickest result of how much they can borrow. But there's hundreds of lenders out there that not every client will be able to access, or do not have the time to shop around to do the calculation with every single bank available on the market. So after the 1st of July 2021, which is in 2 financial year, not just for big banks in the market will make the data available for sharing, but pretty much any entity with banking license. Any entity with banking license, which means that any lenders in the market will make the data available for sharing. So if you apply for one application of having a loan to buy another investment properties, the consumer will have more options of shopping around, choosing the best deal. However, not everyone will have enough time to do it. So mortgage broker will still be the one that acting on behalf of investor to be able to get them the best deal. Tips to choose mortgage broker, there will be a lot of tips how to choose a good mortgage broker, which I will be sharing in another week. So the purpose of this week is just like, be careful with whatever payment that you don't want people to see. Be careful with missed payment, or be careful with your payment frequency. Try to make payment on time, and also get into organizing your account. If you don't have knowledge into that one, if you don't have the experience into manage your cash flow, you make sure that you get contact with a professional, either financial planner or tax accountant like me, to structure all the accounts for you, and also to give you one tailor-made plan to make sure that you have a good credit in the future. Because if you look into investing like 10 or 20 houses in the future, it has to be the way. No one can avoid from data sharing anymore. So thank you so much. Please share this video and like our page, and we will have more updates in upcoming weeks. Thank you. Bye.